All right, traders, here's your year-end view of the S&P going into the last part of November here and then into December. We've got two main holidays coming up as part of these 2 months as well. At some point, the trading should diminish a little bit at the ends of both of these months, but we have more electronic trading now than ever before. So we'll have to see how this shakes out. But the important takeaway here is this is the S&P futures. This is now going back 120 days. For those of you that are balance beam traders, I'm on a 120-minute chart here. If you'll look to these key horizontal spikes here, 1960s is about the floor zone here, a little bit lower to about 1955s or so at the very bottom, and then the ceiling here coming in at about 1995s, a little bit of an air pocket in between the two of them, but there's a lot of trading commitment here, and this would be an area to watch for key support to come in on any pullbacks that we get into these zones here. Where we are right now, Sunday Globex, we are at 2029. There's a lot of trading commitment here that's built over the last trip that we've had into this zone here, just over the last several days, and we're seeing a little bit of a rollover here, maybe a miniature head and shoulders top developing, this move up here getting a little steeper, then starting to roll over. If we break down here a couple more points, we could see a bit of an acceleration through the zone where there's not quite as much trading. And the three key areas that I'm looking for on a breakdown would be 1650s, 2008 75, and then 1995s. And that basically correlates with the ceiling here, this spike, and then pulling into this ceiling here. So a little bit of a slowdown to be expected here, and then pulling into the ceiling here. We would expect this to be acting as support since we're in a bullish trend here in a bullish market. You would expect the top line to be support in the strongest way. So that's what is spelled out here. If we can hang on to this zone, and maybe we break a little bit lower here, we have a couple points into the zone, and then the bulls come and recover it. Something to watch, basically from about 2027s up to about 2040, there's a lot of trading commitment up here, and there could be a couple of signals that might reverse quickly after they're triggered. But ultimately, the owner of price moving below or above these key zones here will likely dictate price moving further in that direction. So if the bulls can hold the sell-off from happening here and start to drive it up, if they can get up about 8 or 9 more points here, they're going to be trading over this spike and over this little ceiling here, and that's basically taking us into outer space, an area where we've never been before in the S&P, trading at yet new all-time highs above this level here. In terms of trading commitment, the little spike takes us a little higher than that, but that's a momentary blip in time. This has been building over more days than that little blip occurred right there. So I'm more concerned with seeing price over this 2037 top line here, and if it does, we're very likely going to be going up to 2072. 2050 as a round number, obviously on the way up there, but 2072.75 is really the bell ringer north of where we are, and the trigger to see that coming would be a price passage back over 37s there. So in the next couple weeks here and into the live room starting this week, we'll be watching these key levels here, and it may provide more than one trade opportunity at these levels. In other words, 26.75s and 37.75s. Seeing price break above or below those areas a couple times in the next couple weeks might give us more than one trade opportunity. Absolutely. Keep price points below the big bell ringer north, and really it's going to be all about response at these areas. The last thing I'll leave you with is where these key commitments are. This happens to be where a lot of catalytic market change happens, and it's always emotion driven regardless of how people want to label it. It's typically areas where people will say something to the effect, if I only did the opposite. Traders that are going along here as we break below all this support, they're saying if I only did the opposite, and it's easy to move low quick because we've got nothing there to grab onto. Just like when the bulls recover that zone, traders that are shorting here, they're shorting at the absolute worst spot as the bulls start to reclaim a key floor, and those shorts are saying the same thing as we drive up to retest this zone here. So people that are going short here as we break over a key commitment level, again, the worst place to go short, yet a lot of traders going short there because of their idea of fundamentals or emotion, what have you. These key price points here will create the same sort of phenomenon that occurred at these areas. People that were long here, great spot to go long. Where's your risk control? You see price come back to that level and break below, very good chance we're filling to the other side, right? You don't have any risk control there, then you might be forced to sell in a more panicked state that could propel price lower, regardless of where you are on the food chain in terms of how many contracts you're trading. The same thing affects all traders. So ultimately, if you know what your plans are when price does X, you'll have a lot healthier go trading the markets. So I'll leave you with that. We'll be updating this in the live room ongoing through the end of the year. There's your look at the S&P and the battle plan initially as we head on out into a new week.